It is last call in Austin, Texas. This might be your last chance to buy real estate before the market takes off. And we are going to explain here on our January market update. It is 2024. Excited to be chatting with you guys today. I'm David Shapiro with the Shapiro Group and my colleague Lee Abraham. So let's just dive right into the stats. So here is the number of active listings over time. You can see going back to early 2022 when the market was hot and there was just very few listings. As interest rates rose, you can see the number of listings that were sitting on the market increased as well. And we've seen some ups and downs, and we've kind of settled in here last year in this 2,600 number of active listings for single family homes in the city of Austin. Coming into this winter, we can see that's dropped off. Seasonality as people are pulling their homes off the market. And Lee's going to show us kind of another statistic, which is a little bit more involved, which is the monthly housing inventory.
Yeah, so we look at the monthly housing inventory, and really all we're doing is we're saying, okay, there's 1,886 active listings. Well, if we look at how many homes have been sold over the past 30 days that are, pending sales, the most current data, 534 sales during that time frame, you've got about a 3.5 month inventory. You can see that the closed sales over the past month, 525, very, very close. Again, about 3.5 month inventory. And then when we take a look over the past 3 months or so, basically the same sort of numbers, mid, low 500s. Over the past 12 months, the sales were more robust on average, and you can see that lower monthly housing inventory. So what does it all mean? Basically, David, for folks that were watching us last month, we were significantly higher in terms of the monthly housing inventory, moving towards 6-month inventory, which would be a balanced market. Here, the market's retracted back. Part of that is because, as we'll see, the number of active listings has dropped more significantly than the number of pending sales. Sales have been a little bit stronger, and that's resulted in a 3.5 month inventory. Basically, this is the first clue, the first breadcrumb on the trail of what is to come. As we say, this may be the last call in Austin.
Yeah, very interesting. I'm surprised to see the monthly housing inventory actually dropping because demand is still down, but the number of active listings down significantly. So
Right.
that's pretty interesting. And here's the monthly housing inventory over time. You can see the chart tracks similarly to the number of active listings. And you can see we were up about 5 months of inventory, and that's pretty standard with seasonality in the winter is that the inventory peaks. And in the spring, it comes back down. I think some people are concerned, like in the fall, oh my gosh, it's, inventory's up again. It's going into the winter. That's it. We're going to see a crash. No, this happens every year. Every year, people are afraid of the winter. And then the spring comes, the buyer activity picks up. And it's always, it's 2024. We've got the Fed has said they're going to lower interest rates multiple times this year. So there's a lot of reasons why that we're not surprised to see a trend. This is actually happening earlier than I expected,
Right.
but I think the trend here in the spring is going to be that the inventory drops significantly as more buyers come in, and there's still like not that many houses available.
Right. So let's just break down some of the underlying numbers. The number of sales per month down year over year, about 12.8%, up month to month, just under 10%. So that's the numbers for the number of sales, and then the rest of the stats begin to fill in the blanks on the rest of the story.
So the average sales price just about flat, slightly up. So, not this is stability. That's kind of the message we've been talking about for the last several months is that we're seeing stability in the market, which, we've seen the stability. The bottom's in, folks. Like this is it. We've hit the bottom, and now from here, it's going to be the appreciation as the market continues to move forward with lower interest rates and increased buyer demand. There's just not enough supply. That's the story, not just in Austin, but nationwide. So if you're looking at another market, you do well to buy now in the majority of markets in the country.
Days to sell, David, up year over year. That's no surprise. At 62 days to sell, it's about 2 months. Certainly higher than what it's been for the past few years. And as we just kind of scan back over the past 5 years, almost the peak. We had 61 days in March of this year, 72 days in February of this year. So towards the upper end, something that we track. Again, once you get over, say, 90 days, 100 days on market to sell, as long as that's when we have more concern. As of right now, this is reasonably healthy, and we keep an eye on it and let you know if there's anything to be concerned about.
And you can see the seasonality, like it peaked in February and then it came down and it was down as low as 39 days in June. And so, we're going to see the same seasonality this year. Like this number is definitely going to come down over the course of the year.
Yeah, I do think that June days on market could be a very interesting litmus test. That 39 days,
Hmm.
42 days in July, that's going to be really interesting to take a look at in retrospect. And just, we're kind of getting the feeling that the market's going to have more velocity in 2024 than we've seen. And this is one of the first stats where it shows up.
Yeah. And then we've seen in the last, year and a half or so.
Right.
No, number of new listings down 2.8%, down 36% month to month. So pretty standard. You can see listings are generally down in December with the holidays. People are just not really focused on selling. They're doing other stuff. And then come January, that tends to pick back up as we head into the spring selling season.
Sale price list price ratio, as odd a statistic as this is, one of the oddities of it is how consistent it's been. Absolutely no movement year over year, David, 96.18%. And then month to month, just down ever so slightly at 0.2%. So the poster child of stability.
And then we have our listing inventory barometer, the most real time. The only other thing that's more real time is some anecdotes that I'll share with you, but very real time statistics here. And you can see that new listings in the last week, there's only 70 new listings, so really low. You can see compared to previous weeks, and then pending sales, which of course it's holidays. That's what you'd expect. People aren't listing their home generally over Christmas or right before New Year's. Pending sales, though, pretty solid in comparison. So now
Right.
we've had, look at this, 4 weeks in a row where
Yeah.
we've actually sold more homes than have been listed.
And
So
that's
that's a
five of
big,
the last six.
yeah, so big change from what we were seeing previously.
Right.
Now, we might see a bunch of new listings here in the new year because people are like, all right, we're past the holidays, times to get listed. But I think buyer demand is also going to increase, and we'll see, do we stay at this type of ratio? Does it go over? I wouldn't be surprised if we see some weeks where the listings are higher. But I think the ultimate trend is going to be, like you said, Lee, more velocity, more transactions
Right.
happening,
Yeah.
and price appreciation over the course of this year.
Totally agree. So, David, here's our Freddie Mac primary mortgage market survey, and it's just a neat infographic. You can see that for this most recent survey, 6.6 interest rate. Last time we did our report, we were north of 7%. And so, a lot of this stuff, obviously, it's financial. Obviously, there's numbers, debt to income ratio, all kinds of different things that come into play with effective demand and mortgages. However, also the perception of what's happening is key as people get caught up in momentum, as there's more bids coming in on offers. And I do think that the trend that the Fed has signaled of decreases, as you said earlier, is going to fuel the market. If we're starting the year at 6.6, that continues to slide, we're going to have more momentum for the velocity and the things that we've been talking about, as this may be the time. In several past months, we've talked about when's the right time to buy. Well, the best time to buy is before rates come down. Now it's best time to buy is before rates come down a lot more than they already have, I think is the
Mhm.
nuance of our message.
Yeah. I mean, the only thing, there's going to be some people that are thinking, well, I'm going to wait for rates to come down more. So you're just trying to get in before those people, and the demand picks up, and it's just, again, hard to buy. Like if you were trying to buy in 2021 and you saw how hard it was, Like there's just lots of offers, lots of people looking at homes. You had to move really quickly. People that have been buying over the last year and a half have had more of a casual experience. They haven't had to move so quickly. That's been really nice. But those days might be coming to an end. So I would encourage you, if you've been on the fence, you're thinking about buying, that you get into the market, give us a call. Go ahead down to the description. You can schedule a call directly with us. Give us a text, email, whatever works out best for you. And let's hop on a call and let's strategize. There's a lot of things. For example, you might be thinking that right now my goal is to get the lowest interest rate possible. Well, I've got a contrarian thought on that, which is you should be going to your lender and getting as high a rate as possible. Because what do you think you're going to want to do in 6 months or a year and a half from now when rates are even lower? You're going to want to refi, right? So knowing that, you should go to your lender and actually ask for a higher rate, and you want to credit, because that's how this works. You can get a lower rate, you could buy down your rate and get a lower rate, but you can also get a discount off like a credit, a couple $1,000, $5,000, whatever, depending on the loan amount, and you can use that to put towards a refi later. So these are some strategies that maybe you're not thinking about, but you should reach out to us and we'll walk you through the best way to do this to take advantage of buying and not be going around along with the crowds, buying when everybody else is buying in 6 months from now when rates are even lower. If you think about, if we were about a half point off the rates from where they were a month ago, okay, more than half a point. And what does that mean to a buyer? Well, let's just say we get a point off, which is coming here, I'm sure in the next 6 months will be a full point off of where we were a month ago. Well, if you were going to buy a $1.2 million house, 1% of that's 12 grand. That's $1,000 a month. So we're at a point where this is significantly different monthly cost to a homeowner, to a buyer. So we're going to see more and more people come into the market as these rates go lower. I think that's the important message here. And just talking about some of the anecdotes of like why we think the market's picking up is we had somebody on our team put 2 contracts on a home on January 1st. 2 contracts on 2 different homes on January 1st after, that agent maybe did 2 contracts in the last quarter. So things are really starting to pick up, and that's like the first sense that we get as we're talking to buyers. More buyers are reaching out to us. So hopefully we've stressed this enough that we think it's very important, if you're thinking about buying, that you get in. And the good news for sellers at this point is that if you've been holding off waiting to sell because you wanted for the market, like we had kind of advised, like lifestyle, you have to sell, do that. If you've been waiting because you want to wait for the market to improve, you're going to have your opportunity here in the spring. And I think it's only going to get better as time progresses here over the coming years. All right, that concludes the city part, Austin. Let's talk about the suburbs. So a lot of times when you'll see these stats, they're just lumping. They've got Austin and then they've got the metro area, which kind of encompasses that. But what we've done is we've actually broken this out. So we don't want to skew the numbers by having the city in there. So we're just talking about the suburbs, which is a much larger area in terms of the number of homes. And you'll see that's represented here with the number of active listings. So Lee, if you want to chat about the housing inventory.
Yeah, so just to cut to the chase, we already went through the math on that chart on the left on dividing the number of sales per month by the number of active listings. I think the main takeaway here, David, is the bar chart to the right, significantly higher now. We've seen some of these numbers move around as compared to Austin proper, the city of Austin. And so here, the 30-day pending numbers off to the right, 4.5, if you will, basically a full month inventory more than in town. And I am seeing a little bit of that breakaway, if you will, where the stats are starting to diverge a bit, where Austin is starting to show better performance in terms of absorption and price appreciation and those type of things, whereas we're really starting to see a little bit more of a lag in the burbs.
Yeah. And if you're curious to track these stats and see what's happening over time, go ahead and subscribe to our channel. So that way you're notified of next videos, because we're going to keep you updated. We've been doing these now consistently for 2 years. I've been doing these, less consistently for even longer than that, if you want to go back and look. And one thing I said going back to 2019 is I was telling people Austin real estate is going to double in the next 10 years. And the reason I was saying that is because people would come and be like, oh, I wish I'd bought in 2010. It was such an opportunity. And you might be thinking, man, I missed the boat on Austin. You did not miss the boat yet. This city still has a lot of room for growth. I called it in 2019 that this city was going to double in the next 10 years. Of course, we had a lot of factors, but we're well on our way to a double since 2019. That's certainly going to happen. And I think even if you said from today, looking 10 years forward, Austin's going to double. Okay. I think it's pretty, the writing's on the wall. The growth is trajectory that we have is phenomenal. And so don't feel like you've missed out. Like, here's your opportunity. I'm telling you, like, last call though, because it's going to start to get harder and harder to buy. So if you haven't yet, like, reach out. Let's see if we can strategize on how you can do that. So moving on here from this, and by the way, if you're getting a lot of this video, please go ahead and share it with a friend, give it a like down below so more people can find it. So let's talk about the average sales price outside the city limits, down a little bit, 1.9%, but still some stability there, I would say. You can see obviously the average sale price outside of the city limits is lower than inside the city.
I think that's one of the main reasons why we segment the data. It's just radically different numbers on those sale prices. And, it's a long conversation. Why do you use the average or the mean rather than the median price? There's a lot of depth to it. But by separating it out, we get a more clear picture, and you can see relative stability in the burbs regarding the average sale price. So here we've got days on market, and again, up any which way you look at it. And now we're at 82 days to sell outside the city limits. So this is the highest number on record. You can see January of 2019, it was 81 days. And here we are at 82. So we'll be tracking this carefully, and we'll be reporting on it. Right now, as I said, we're starting to see a little bit softer demand dynamic out in the burbs, and this is just one indication to support that.
Number of new listings up 9.9%. So actually a different trend than in the city where the number of new listings was down. But, nothing I don't think too concerning. I mean, this is kind of the same trend that we've talked about, that the city performs better than the suburbs generally.
Right.
So
sell price list price ratio, once again, very, very stable, up a little bit year over year, down a little bit month to month, right at about 97%. It's basically what was it listed for, what did it wind up selling for. It's a lot healthier overall for a sustained market than, say, the 107% from June of 21 and what was going on with that market. So although sellers and agents love to be able to put a sign out in the yard and sell for over list price over the weekend, it's not that market anymore. So by comparison, this may not look as attractive to those viewing from afar, but 97% is a very healthy number, and just more stability in our overall market.
And one other concept I'd like to talk about quickly is just getting into the market. Maybe you're not sure, do I want to live in this home forever? Do I even want to live in Austin forever? But thinking about, like, if you're here's a renter, here's a homeowner. If the prices rise and you're a renter, you're not keeping up with it. And if you just get in right here and prices rise, you're keeping up. So if you want to move from this home to this home, it gives you some optionality to be in the market. So I think that's important here, is to get into the market and own. If you want to talk about the numbers, you're like, what does it look like to own? Like, I don't think I can afford it. Like, people are always surprised when we run through the numbers and show them what it looks like to own and the advantages of homeownership, because there's a lot of tax advantages. There's the fact you're paying down your mortgage every month. Last year I just looked, like, I think it's something like $50,000 a year I pay down in mortgages, right? That's $50,000 a year added to my net worth because I have tenants and other people, the number of properties I have, the mortgages are getting paid down, mostly by tenants, by the way. So it's a really powerful force. I'd encourage you to look into it, whether that means chatting with us or just watching some other YouTube videos to try to understand that's amortization and the power of some of these other tools that real estate offers. But go ahead and reach out to us if you want to chat. We'd love to talk with you. And if you got a lot of this video, please like it, share it with a friend, and subscribe to the channel so you can see us on the next video. Thanks, y'all.
Thanks, everybody.